Hi, everyone. I'm Maggie McGrath, Senior Editor at Forbes. Tesla reported its first quarter 2025 earnings today, and profit was down a whopping 70%. Here to explain exactly what's going on at the automaker is my colleague, Alan Ohnsman. He is a senior editor covering clean tech and automotive. Alan, thank you so much for being here.
Hi, Maggie. Good to be with you. Um,
You've been covering Tesla for quite some time. Take us through this earnings report. I mentioned that 70% figure, but can you take us through top line, bottom line, just the basics, what they reported today?
yeah, honestly, the numbers were just awful. They were below analyst expectations across the board. Earnings, revenue, net income, everything came in low. They posted adjusted earnings of 27 cents a share and revenue of $19.3 billion for the quarter. Analysts had expected $2 billion more, 21.3 billion in revenue for the quarter, and EPS of 41 cents. This was bad. They remained profitable, but only by a whisker. They reported 409 million dollars of net income, which was down 71% from Q1 2024. And the only thing that kept the company out of the red was these regulatory credit sales that Tesla books. This is essentially free money. In California, U.S. Corporate fuel efficiency standards, EU efficiency standards, in those markets, automakers have to meet certain pollution requirements. If they don't, they buy credits to stay in compliance with pollution rules. And in this case, Tesla booked $595 million in credit sales. That is free money. It's pure profit. So had it not been for all of those credit sales, they would have been in serious trouble and would have come in the red this quarter, actually.
You've been covering Tesla for a number of years. How does this quarter compare to recent quarters over the last 4 or 5 years?
This is a bad one. This is their worst performance in about 4 years, actually, in by every measure, but especially on the net income side and EPS side. So that's not good. And some analyst reports are beginning to roll in, and the sense is 2025 is going to just be a very tough year for Tesla. It was expected that Q1 numbers were going to be bad. A couple of weeks ago, the company had already released its vehicle delivery figures. That was on a worldwide basis for Q1, and they reported that in terms of vehicle sales, they were down 13% year over year. But interestingly, when the numbers came out today, vehicle sales down 13% on a unit basis, but automotive revenue fell 20%. And what that means is not only did they sell fewer vehicles, they made less revenue for what they sold. So that means they were having to cut prices. So that hurts the margin. So Tesla really did not look great this quarter financially. It's kind of a shocker because people have gotten used to them really sort of leading the pack in the auto industry with much more robust revenue and profit growth than other automotive competitors. That was absolutely not the case this quarter.
It feels like there could be a number of factors leading to these terrible numbers. What was the primary culprit? Did the company say?
Well, they actually did, both Elon Musk and the CFO did reference the fact that there's been a lot of brand blowback. And they tied it to Musk's activities related to Doge with the Trump administration and protests that the brand has seen, especially in Europe and the United States. And so they did acknowledge that that has been a problem. They also pointed out that they were doing some modifications to plants, especially in Texas, doing some upgrades, which slowed production in the quarter, so they weren't able to build quite as many vehicles because of these planned upgrades. But that really, I'm not sure I buy that as the big reason why sales were down, because they actually ended the quarter with a fair amount of inventory, vehicle inventory, unsold vehicles, especially things like Cybertruck. So yeah, they did acknowledge there has been a problem with Musk's political activities. There's been blowback for Tesla, and that's really where he did clarify on the call that beginning in May, he is going to step back a bit from Doge. He said he's not going to entirely end his activities with the Trump administration. He will keep a hand in, but he's going to be more of a regular CEO for Tesla again, because clearly, by every measure, he was an absentee CEO in Q1. He simply was spending far more time in Washington and with other companies and other activities than he was at Tesla.
Did he say that? Did he admit that he did not spend enough time with Tesla?
He didn't phrase it that way, but he did acknowledge he hasn't been spending as much time there. And I think he basically said on the call he was going to cut his government duties to maybe 1 day a week rather than multiple days a week.
Which is consistent with something he said either earlier this month or at the end of March. And there was already kind of a term limit on him serving in the government due to transparency rules. So how much of this "I'm going to come back" is because of the earnings, and how much was pre-planned?
It's probably a little bit of both. I mean, as you point out, his status right now with Doge is he's a special government employee, and there is like a 120-day or something limit on that. So the clock is ticking, and so he really would have to stop by law under the laws it exists currently. So the extent of his activity will change perhaps in May. But yeah, he's telegraphed that and knew it was happening. But I think, the fact that he's coming back to Tesla full time, I don't know that that changes some of the fundamental challenges that the company is facing. Number one, and the most obvious, is they do seem to have underinvested in new products pretty dramatically. The last meaningful new product they introduced was the Model Y, and that came out at the end of 2019. Cybertruck launched at the end of 2023, but that's been a niche product. It's not selling well, and so that's really not a meaningful product for the company's business. It really is these high volume, affordable models like the Model 3 or the Model Y that have been their big opportunities. And they really haven't come up with any kind of successor products that could really build the brand, beyond where it is right now. And they've just plateaued. Annual sales fell last year. The quarter was down year over year, and analysts expect they will post an annual decline in vehicle sales this year as well. So those aren't great indicators for the core business. As usual, Elon did what he often does. He's pivoting to the future. And the future at Tesla, if you believe Elon, is AI, autonomous vehicles, and humanoid robots. And he talked a bit about that. So he did sort of, move past the lousy quarterly numbers to get to, but the future is going to be really bright. And it's pinned on these technologies.
That's an interesting pivot. There were reports earlier this month that Elon is focused on a robo-taxi product at the expense of what you just described as those lower cost, higher volume cars. There had been rumors for a while, and I don't know if it came from Tesla or folks who just want this, about a car that might be $30,000 or under. Can you talk about the tension within the company that may or may not exist between these AI, robo-taxi, humanoid products versus those lower cost, high volume vehicles?
Yeah, I mean, literally to the beginning of the company in Elon's manifesto, all the way back in 2006, he had promised that each successive Tesla model would be more affordable than the one before it. And it has just not worked out that way. The first product, the Roadster, came out in 2008. It was over $100,000. Then in 2012, they launched the Model S, which really established the brand as we know it today. But when that came to market, it was selling for close to $100,000. It was about 80,000 or so. It came down in price a bit. Then the next model was even more expensive. The Model X went way up. After that, he promised we're going to have a mass market car. That was the Model 3. It'll cost $35,000. It didn't. When it came out, it was closer to $50,000 all in. Now you can get one for much closer to 35,000, but it took a while. The Model Y was more expensive than the Model 3. It was 45 to 49,000 base model when it came out. And the point of this is they've never had this, widely affordable, cheap Tesla that he's promised. The one that had been expected for a very long time was called the Model 2. And there had been an expectation that that would be on the market by now. Last year, Elon said something that was a bit confusing, where he said, "Yeah, we're not going to do that. We're going to do this thing instead called the Cybercab." And the Cybercab that they showed off last fall, which is their robotaxi, appears to be the styling design that was kind of expected as the Model 2. And that is supposed to go on sale next year, but it'll only be sold as a fully autonomous robotaxi. So it's a little confusing. So people are going to buy this and it's your personal robotaxi, or it's going to be part of a Tesla robotaxi service. And anyway, it's that piece of the plan is still quite murky, but the long promised $25,000 Tesla is still not here. They did say today that they're going to be lower cost derivatives of the Model 3 and the Model Y still coming this year. There had been a report by Reuters last week that that was not happening. Reuters didn't identify who they were talking to, but their report said those are canceled. The company did say today those are still coming and we're working on them, but we didn't get any specifics. And it's difficult to understand in the current environment because of tariffs and how much more expensive some of the inputs are becoming, how they're going to be able to produce these lower priced vehicles that are, $5, 6, 7, $8,000 less than the standard versions of Model 3 and Model Y that we have now. So we didn't get a lot of clarity on that in the call today.
You led right into my next question. I was going to ask, this is for a quarter that ended before Liberation Day, before a lot of these tariffs hit. So what was the company's forward guidance, and what are Wall Street analysts saying? Do they believe that the guidance is as rosy as Elon painted it?
Elon kind of played it up in a, we're not going to be hurt that badly kind of tone, but the CFO was a little more buttoned down and said, we just don't know. And obviously we are going to be impacted by higher prices. They pointed out they've tried to localize to the maximum extent possible production of both batteries and vehicles within the United States. To try to insulate themselves from these impacts. But Tesla uses steel, they use aluminum, they use miscellaneous parts that are imported from Canada, Japan, South Korea, different places. So it's very complicated. And I think the analysts, again, a report I was reading just before we started talking, that particular analyst had downgraded his full year sales volume, volume figure for the company, simply because he was saying realistically, we've been too optimistic about Tesla's ability to bounce back from this. And so I think he was predicting that they'll only do about 1.72 million vehicles in 2025. That's over 100,000 units less than last year. And last year was down slightly from 2023. So bottom line, at least as far as vehicle sales go, there doesn't seem to be a lot of high expectation that the company's going to turn things around this year.
And is that, when you say turn around from this, is the this in reference to tariffs, or is this in reference to the brand hit that Tesla seems to be undergoing due to Musk's involvement with the Trump administration?
It's both, but really more on your latter point. This brand issue is a problem, and it is unique to Tesla. This is not an issue for Ford or Toyota or General Motors. This is a Tesla thing, and more specifically, it's an Elon thing, and that's what puts them in a different basket. There are plenty of people that are still Elon Tesla fans, and their faith in the brand and him is not shaken. But we just keep seeing consumer survey after consumer survey that the brand, a lot of people are souring on both Tesla and Elon and want nothing to do with it. That's a real problem. And I, short of the company putting in a new CEO, I don't know how you really fix that. He and the brand are one and the same, and it does have broad implications for sales and other things.
They're intertwined in a way that not every founder, CEO, and his product are intertwined, for better or for worse. For a long time, I think it was to the company's benefit. But do you think he was aware of the political capital he was giving up by getting more political?
I really can't answer that. He opened up the call today when he talked about the fact that he was going to step back, but then when he addressed the protests, he was completely defending everything that Doge has done. He said, we're rooting out fraud and waste, and he claimed that Tesla protesters are people that had been benefiting from government fraud and waste. So his view seemed to be that the protesters, these aren't real people, real customers, real buyers. These are disgruntled government employees or something. I mean, I couldn't really follow it. So I'm not sure he yet appreciates what has happened and his responsibility in how the brand is suffering right now.
So we've been talking about the company, and I do want to move briefly to the stock. I checked in the middle of the trading day today, and Tesla was actually up. I don't know if folks were anticipating a dip, or I don't know what was going on. But Alan, how has the stock behaved in aftermarket trading since this report came out?
Aftermarket, the shares were up quite a bit, 4 or 5% at one point. And it seems to be that that reaction was kind of many investors feeling elated or pleased to hear that Elon is coming back as more of a full-time CEO with the company, that he won't be quite so involved with Trump administration things and Doge. And that really seems to be the only justification for why the stock went up, because certainly there was nothing in the numbers to give you confidence that the rest of the year is going to be better. He did pivot to talking about the new things they're going to be doing. Specifically, the thing we'll all be watching is the rollout of Tesla's robotaxi offering, which is supposed to launch in June in Austin, Texas. This is going to be probably a fairly limited program. He said it'll only involve maybe 10 to 20 vehicles initially, and it's only in Austin. There's a lot we don't know about how they're doing this. Waymo has become sort of the industry standard right now for robotaxis. They're here in Los Angeles, they're in San Francisco, they're in Phoenix. They just launched in Austin. They're getting ready to go to Atlanta, Miami. They're testing in Nashville, Washington, D.C. And Waymo's approach is very, very thorough in terms of structured testing. They map the roads, they have vehicles loaded with LiDAR and computers and radar and cameras, and they don't let people, non-company employees, in the vehicles until they have a certain comfort level. And they don't begin commercial service until they really feel we've got this down. Tesla's taken a radically different approach, and some would say a very dangerous and risky approach. They've had autopilot and FSD, full self-driving software in the cars for years. They've also had a number of accidents, including some fatalities, involving the use of that technology, which they've always described as sort of beta testing, except it's beta testing with real human beings in real circumstances. And there have been a number of serious accidents and deaths resulting from that. Elon keeps promising that they're reaching the point where the FSD software is good enough that humans can be driven without having to take control of the vehicle at all times by the driver. But the way that they've done this is so profoundly different than every other company that's developing autonomous vehicles has approached it. I would say, objectively, there's good reason for concern about how safe and reliable that system will be. I could be completely wrong about that, and maybe they'll suddenly show that they've mastered this. But I'm Missouri. Show me. I really need to see the proof that this can be done reliably and safely, and I'm not convinced about that. But he talked up the fact that this will begin for the company in Austin, and he believes by the end of this year there will be a great many Teslas all over the place across the country that are offering autonomous ride services. And his argument is we can do this more cheaply than Waymo. We have a lower cost system. They have a lower cost system because Tesla only uses cameras. That's it, just some cameras. He always says humans only have two eyes and a brain, and we drive just fine. You talk to a lot of computer scientists and AV researchers, and they're like, yeah, the car's computer is not a human brain and cameras are not eyes. So that's, it's not really it's not the most accurate analogy there. Anyway, that is what he's really pushing hard. Don't mind our declining vehicle sales because we're going to be the robotaxi company and we're going to be an AI company. And by next year, we're going to have thousands of humanoid robots working in our factories. So we'll see.
There is a lot to be seen, but in the meantime, Alan, what are your primary questions over the next quarter or two? What will you be looking for?
I really want to see if they get serious on the product side about addressing the weakness of the brand right now, and doing things other than just cheaper versions of the Model 3 and the Model Y. There's a lot of competitive product in the EV space right now. Hyundai has great stuff. Kia has great stuff. General Motors has with its like Equinox, electric Equinox SUV. That's really good. A new version of the Chevy Bolt that was a very affordable EV is coming back this year. There's compelling competition at all price points for Tesla. Rivian has gotten very popular in the higher price stuff with their electric SUV and electric pickup. There's just a whole range of compelling new product. The Tesla Model line is a little bit stale. I'm not sure just offering the same thing at a lower price is the most compelling strategy. So a big question is, can they really come out with something new to gin up some excitement? And then the second question would be, on the robotaxi side, can they really deliver what he's been promising? Because again, just like with affordable EVs, Elon has been promising robotaxi capability for a very long time. This was originally supposed to be available by like 2020 or 2021, didn't happen. We'll see what happens in Austin in June. That's going to be a huge question.
That is certainly something to watch. Alan Ohnsman, thank you so much for joining us. We really appreciate you breaking down Tesla's Q1 earnings. We will have to have you back as each quarter unfolds.
Sure. Thanks. Good to be with you, Maggie.